The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here on this 13th of December, getting to the midway point in that monthly chart. Look at that candle, still very ugly. All right, Dow's up 41 at 24,565. Yesterday I had a trend gauge reading, Chapman wave trend gauge reading, which suggested that no matter how high the futures are at any point pre-market opening, there should be a slide to negative in the Dow. Well, the futures were quite sharply higher overnight, came back pretty sharply, but the Dow then opened up without going negative. It ran up about 180 points, and all of a sudden it came back down and it went fractionally lower. So this trend gauge worked yet again. Then it rebounded quite sharply. I don't know how many 100 points moved to the upside we've had just in one day. In the Dow, and now we're trading at plus 30, plus 25. I keep talking, it could be plus 10 before you know it. Look at this chart formation. Remember, I drew this in ages ago. I drew in the H pattern that I said should go to and could possibly go to a lowercase m if the left side low of 24,122 in the Dow held. That was the October and the 29th low. Runs up to 26,277, comes back down, makes a higher low at 24,268, runs up again and runs to 25,000, I think it was 980 or something, 25,980. In the midterm election spike to 26,277 was repeated with the spike on the 3rd of December. It was a one-day spike, goes just a fraction above the Chapman wave inside track repellent zone, gets taken out, and we go to a lower low of 23,881. Now that we've tested the 23,000s, it tells me a couple of things. It tells me that 23,344 low of April, which has really been my target, the 23,300 has been my target for this particular phase, before I can reassess to see what else happens, I think it's in play. And when you're looking at very oversold readings, they're not as oversold as you think, because look, the stochastic has been making slightly higher highs off the low, while the price is making a lower low. That's a divergence that should be positive. But the power of this 14-period moving average of 24,801, this little black line right there, whoops, I made the whole thing black, just this black line right here, is so powerful, it's just repelled the price for about 6 sessions, big sessions, and now it's just done it again. All right, so what am I looking at in the next week and a half? If there's a close below 23,881, I say just be really careful. If there is a close above 25,050, I'd say great. Now we can have Santa spikes and Grinch grumbles. I don't know what we can talk about it here. It's a mix. Even intraday, you've got this mix of this bifurcated market of some stocks doing well and some stocks doing very poorly. All I can say is that I'm looking at prices, and so far my theory that we will see lower lows and lower highs, that's in play. I'm staying with that, at least for now. All right, and probably for most of December. All right. Now let's go to the S&P. SPX was being much weaker than the Dow. It's down 4.74 2646. Same pattern. The lowercase h goes to a lowercase m, makes lower lows, goes from the 2603 low that was made in late October to the most recent low of 258323. Let me just type that in. 2583.23. Good. And that 9-period moving average and the 14-period moving average of 2679 has just been repelling the price until we can close in the 2683 area and hold there for about 2 out of 3 days. This just looks like there's just too many There are too many other issues going on. And let's say that even one was resolved. There are at least 5 pretty serious ones. We can talk about the Fed. We can talk about Brexit. We can talk about the whole aspect of the second that the Democrats come in. I mean, they did it to Donald Trump way before he was even an electoral candidate. They were just lambasting him. So by the time he became president, surprise, surprise, by the time he became president, it just, I mean, every hour of every day, there's been, let me just see, New York Times headline. This, I don't ever read the New York Times, but somehow I've got an icon here that shows headlines. What's the headline? How big oil secretly pushed for Trump's car emissions rollback. Maria Bettini accused Russian agent, pleads guilty. Trump blames Cohen for campaign. Just on and on and on. Tabloid publishers deal in hush money inquiry as to Trump. This is the New York Times. This is the paper that used to be a world-class representative of what's going on. Just totally local. I mean, that's how it's gotten. And they might even be 100% correct. I'm not talking about that. I'm talking about headlines. And that's the reason why no matter what any one particular issue is resolved, there are at least 3 or 4. There's Italy, there is debt, there is China. I didn't even mention China. Should have been at the top of the list. There are just too many things, and I think that's putting a big cap on the market. It doesn't mean to say you can crash, but it does say lower lows and lower highs. Lower lows and lower lows and lower highs. 5 words. Lower lows and lower highs. That's the theme. That's my theme, and I'll change it as soon as the S&P starts to close in 28.25, a little higher than the 26.46 we're at right now. I'll be talking about a different theme altogether. And until the VIX index, let's just get this out of the way. Until the VIX index starts to trade in the 17s and then immediately goes to the 16s and holds there for 2 out of 3 weeks, we're back in a bull market, at least a bull phase of a recovery. But until then, no. I just don't see it. All right. Now, let's continue. I got a little rant out of the way there. I wasn't going to go there, but I just did. And I did it only because it irritates me when themes become local, then become national, and then become international. I mean, I don't know who I speak to overseas who does not roll their eyes when the minute or the second the word Trump is mentioned. It's because why? They're getting the news from CNN, they're getting the news from the BBC, you're getting it from all these mediums that are just totally anti-Trump. He has done some good things and he's done some bad things. That's the way to look at it. I mean, the market, trade what you see, state what you see, not what you think. Look to what you see and what you see right now. The QQQ is trading at 164.53. I was asked by a subscriber, why am I having such tight stops? He says it's confusing subscribers. No, I don't think it's confusing subscribers at all. We've been trading this because I don't have the conviction to say I want to buy the Qs because I think the Qs are going from 164 to 173. I think it's just a trade. I said it's a trade, and we've traded as a trade. We've made money as a trade. That's the way I'm going to play it. And the stops are really tight. I don't care. The stops will be tight until I feel I've got a real big leverage. Dow's up 40, S&P's down 3.5. I'll be right back. Basil Chapman. Rent finished. Let's go on.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, since we're doing the indices, let me just do this. I was asked by Ruby in the den if I would look at RTY. RTY, I said to myself, it's so familiar. RTY. RTH is the retail index. I just did a whole bunch of stuff for someone this morning on the RTH. RTY, is that a future? R, what is an R? Rubber something? The RTY is the what is the Y? Why it wouldn't be a Y monthly, it would be something like an H or a Z. And then all of a sudden, of course, RTY is what I trade and I actually chart all the time, which is the RTYHZ 18, that is. So it's the Russell 2000 continuous contract. So here's what I'm looking at. If you look at the monthly chart, you take the weekly chart. If you look at the February 9th low of 1433.30, this is a continuous contract. It goes peak A, then it becomes a peak A minus because there's an A lower than that, above the low that started the whole thing at 1433.30. And then it goes peak A, peak B, F/B, because what do? I have an alternate count here because of the manner of which the MACD crossed positive again. And then it goes two lower lows underneath that, two lower highs. So I still got F/B, and then it went to a G/C, but really quickly, the MACD turned down, the stochastic turned down. I took away the C, and I said, it's a peak G. One of the reasons is, if you look at the IWM, the actual contract, I had it as clear as I could be to very quickly put a G because of the failing 3 bars. It took me about a week or two before I changed it from a G/C to a G, and that's 173.39 was a serious top. We've had an 18% correction in the IWM, which is the Russell 2000 iShares, the ETF. Now, it's the iShares, yes. So if I go back to the contract RTY, let me show you something very interesting. I've got a left side, right side price time match, and it goes from that February low to the candle right here of the week of the 13th of July. And I've got it for a couple of reasons, but one is when I'm working on my plumb line, gee, maybe I need to do a webinar on plumb lines. I'll be doing a bunch of webinars coming up starting in January. If I look at this as a left side, right side price time match, and I use the particular candle that I talk about when I give these classes, I can draw from the peak that was made right here on the 22nd of June at 1729.90. I can draw a trend line, and it goes to the left side, right side price time match of this week, saying that this low of, I should type it in, 1433.30, that's the target. Well, it not only hit that, but we went underneath it. We plunged to 1424.50 on the 10th of December. Now, it also went to the G. G was the all-time high, but I'm taking it in an arch formation from a particular venue, from a place that I've chosen, where if I said to software, hey, software, I'd love to get a plumb line at exactly the top of an arch or the bottom of potential arch or the bottom of a cup. But if I don't get it, I'd like to use it based on a particular candle or a particular pattern. Would the software program automatically program what I just said? There's no way on earth it could do that. And if I made a special, some kind of a template to say, okay, but if this happens, that's where I'd like to take the pivot point, or what I'd call the fulcrum level of the left side, right side price time match. It would do it when I didn't want it. So visually, I can see these things within a split second because I've just done it so many times. So a little complicated there. This should be for Technical Friday, but I'm saying it today because I know there are a lot of you that do the Chapman Wave methodology and have asked me periodically about the plumb line. So this plumb line is a moving plumb line, and I've taken it from a particular candle, a pattern that I like. I always use this one as my preference if it isn't in what I think would be the middle. And we've already accomplished what I wanted. The MACD is still very negative, and the stochastics at 15%. It could even go down to the single digits. This is very weak action in the Russell 2000. The best thing about it is he's got this long-legged doji of the 10th of December, and it says if there is a close within 2 days above the high of 1460.60, that would be very positive. Well, 3 times now we've gone above it, and it's the 3rd session after that candle of the low, and we still haven't even closed above that level. Negative, but only very negative if there is a close below the low of that day, and that would be at 1424.49 or lower. It's a future, so we have to be in 5-cent increment of 25. This one's a 5-cent. So that's what I'm telling you. I think it's 25 cents. Yeah, I can't remember anymore. I even trade the darn thing. I think it's, yeah, in an increment, I can say, of, say, 10 cents. Now what I'm looking at is, let's go on. So the IWM has been the weakest. Percentage-wise, the semiconductors is much worse at 25% correction. The Qs are having a 16% so far from the high to the low, and the IWM is about, I believe, 18%. So keeping that in mind, what we're really looking at here is this arch formation is suggesting strongly that 137 is the 200-period exponential moving average weekly chart target. That is my target. Now, okay, let's get back to our story. Oh, up 1.85. I want to see this Dow go negative, quite negative, so that I can say it wasn't just a fractional Chapman Wave trend gauge success. It was a real success. Although the whole principle of this is that if I get a trend gauge reading that is very low, the Dow the very next day should have weakness going negative before it has a rally, or it could have a rally, but it could give it back. It's done that huge today. And the other part of this is that within the context of the markets, if you're looking at this IWM, look at these red candles making another little mini arch right here. These patterns are potent. Learn them. Arches and cups. They are so important to everything you look at in the market. All right, enough with that. QQQ, let's go there. QQQ is at 164.26. It has taken out the earlier intraday low. It's at 164.30 low. Oh, right now, as we're speaking. And that's the reason why I've had these stops in place. We still have one position that's up very nicely from the low that we got it at. I think that's now vulnerable. Dow's down 5. Chapman Wave trend gauge success on the downside. Very good. Another QQQ, if there is a close in the QQQ below 162 anytime in the next 3 to 4 sessions, ooh, your center rally is going to be under duress. Okay, center sleigh has just run out of gas. Okay, next thing we want to look at is, I haven't looked at it for about an hour. Gold is down 2.5 at 1247. It is holding in the upper range, but it needs to get from 1247 right now. It has to be trading. I'm determined that I've got to look at this as objectively as possible. It's successful now in a shorter term variation of patterns, and the up channel formation. This is really a tiny little up channel when you look at the huge move that has come down from the 1400s to the 1167 and now 1247. So I would say to you, it's good action on gold's part. We'll do silver, we'll do the dollar, we'll do the currencies. As soon as I return, we'll also do copper, which looks like it's having a little bit of a rally. I'll be back. Basil Chapman, Dow's down.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Silver is trading down 0.011. It's in leg C, made a little higher. I drew this rectangle. It's at the upper end of this rectangle. Now I can go to the outer end and raise it a little bit because we have to have rectangle to rectangle. And what I'm really looking at here is the H pattern that has the potential slowly to become a cup formation. I'll have to talk about this in context of a couple of questions I got in. So silver, the chart formation of silver has improved a lot, but until silver trades, getting closer and closer. Look at this. Look at this handicap that it's had every time it's gotten to just a fraction over 15. It gets repelled and has a very sharp pullback. In fact, the last pullback was from beginning of November to the end of November. And lo and behold, it goes from just over 15 to just over 14. I mean, it's a point down. That's a serious blow. But look what's happening. We've started a second cup formation. So the U-shaped pattern is going into the W. Remember, we wanted to know what we could call this in technical analysis, the W formation. There it is. So far, what I'm looking at is the technicals have actually improved tremendously, but the price hasn't appreciated commensurately. And that, to me, is always a worry, because the next time that the technicals come down, they can go really far. If the MACD goes from positive right now to negative, that's a lot of points. We're talking about 1440 in a blink of an eye, down 45 cents. So far, I like what I'm looking at, but I want to see it trading in the 1525 or higher area. I want to see the projection go to the 1553 200 period moving average for the very first time since, oh my, since it broke down at peak E in the daily chart back on the 15th of June at 17.618. And it plummets down to the low that was made of 13.997. I would say that's a pretty big blow. And now it's taken too much time. It needed this is the one that should have broken out. Now you've created an intense series of resistance levels. So yeah, this is now I'm going to put the whole package together with the questions that I've got. This says to me that please just allow me the pleasure to free think like I always do when I'm just doing the work by myself. I can go anywhere without having anyone to say, "Oh my God, how'd you get here? How do you get here?" I'll get there and I'll put it together as a package. Watch. I was asked about the BKX, which is the XLF. This is the financial ETF. KBW Bank Index. Keith Brewitt, if I remember correctly, index. Look how low, look how bad. It's broken the 200 period moving average. Gosh, I used to have it all notated. Let's go to the XLF, which is, keep your eye, you'll see it's exactly the same, except that because it's a derivative of the actual index, the pattern's almost the same. It hasn't taken out the low of 4 days ago, and it hasn't broken the 200 period moving average. But the actual, oh my God, once the city gets your number, they give these things, the refuse, this and the, oh, wait a minute, this is an important call. This is the call I waited to hear. All right, I'll listen, he'll leave a message for me. XLF, S&P Select Financial Spider Fund. Arch formation, just like we were looking at the IWM, takes it out, and in 3 days, it has not been able to close above the low of 25.02. That is a negative. Now you have to wait for a whole buy signal to come in. At 24.49, the target would be, if it even made a tiny low of 24.27, my target would be 23.63, the 200 period exponential moving average, weekly key support that has to hold. The MACD is very negative, stochastic negative in every single time frame. This is not a good sign yet. It could be a turnaround in the next few days. If so, we'll be ready. But right now, this is not good action. So that goes to me, it speaks to me towards gold. I know that it might be hard to see a relationship, but if the XLF is going to be under tremendous pressure, I would say to you that there's a really good chance that at some point people are going to say, hey, stocks are bad. I don't know if I want to go to the bonds. Gold might be the place to go to. Now you can see where I'm trying to tie it in. So if gold is going to work, you would anticipate that the dollar, which today is up a little bit, is up 5 cents, 5 bips or pips, or holding this uptrend line. It's not going to hold it much longer. Just time alone is going to push it underneath. But it's holding very well, the dollar index. But the technicals in the daily are not very good. It's moving up in price, because I think, and I don't know how to prove this, but my instinct says that countries are buying the dollar. It's not hedge funds. Hedge funds, in fact, are going bankrupt, not bankrupt, but a lot of them are closing down. They're having a tough time. So this, to me, looks like it is an international move. But it's ironic that we haven't gone to a higher high above 97.69 in the weekly chart for leg D. Yeah, this could be a peak C1, C2. That's fine. The UUP has already accomplished everything that I wanted. The weekly chart going to its second buy mode in leg E. G/C in the daily, but E in the weekly, leg B. Look at that beautiful leg B. Look at those three tiny red candles from the low of 2309 back in March. I think it was January was 2309. Oh yeah, January low. Audio. It's been running in just a couple of months. It's had a little red candle, and even the red candle has had a higher high. So it's a red candle based on the close of the previous month. I love this. This is really great action. And because it's gone this far, I think the dollar is going to go further at some point. But it could easily have a rest. Look at this arch formation. Remember, arches are formed as the price moves up sharply, and then the highs start to lag. They go higher, but they don't have the same momentum as the previous one. They can pull back deeper and then go slightly higher, and then have a higher low, but then pull back to just a slightly higher high. And that's what we're seeing here. So momentum to me is slowing down unless there's a move in the dollar into the 2620s rather than silver going to the 1525 plus area, because then the dollar and gold will pull back very sharply. This is a really important moment all the way around. I'm even going to put into the pie, because it's going to impact the dollar, that if crude oil, which is up 75 cents, 77 cents right now, at 51.92, still in a terrible sideways pattern rather than breaking out. It should have broken out yesterday, let alone struggling today to get above the 14-period moving average. If crude oil starts to trade at 56.50, 5 points above this where it is now, at any time between now and January, the second week of January, I think what you're going to see is that probably the commodities will move higher. That would include silver. It would include high-grade copper. Had a big move up earlier this morning. Now it's back almost unchanged. And it will include wood, which is the iShares of the global iShares of the timber forestry ETF. And it should include the HGX, which is the housing sector. And that's acting terribly. So there's a lot to ask. I try to put the whole thing together. I'll be right back. Dow's up 46. S&P's down 3. Basil Chapman, Tiger Technicians. I'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So, okay, now we're looking at the HESs, the Philadelphia Housing Sector Index, trading from 369 down to a low recently of 240. I would say 125 points, with 30% almost. This is not a good sign, and it's really struggling. So as I'm putting the whole package together, there are going to be subsectors that really work and subsectors that have stocks within it that work and stocks that don't. Yesterday we were talking about NBEV, National Beverage, I think, is that something beverage, New Age Beverage. And I said to the call, no, that was a question that I got email. And I said, it's looking very good. It's in leg D, and it should go to, and then I did this quick study on left side, right side, price, time match. And I said, my eye says it should go to the 665 or a little bit higher area, maybe 690. Overnight, I saw it trading at 690. It's trading now at 607. But intraday, this is New Age Beverage Co. This is a cannabis company. And the high today was 673. So it's accomplished everything. And I said it's completely different. If you're looking at something like a Cronus, I had a couple of questions in the den about medical marijuana and marijuana stocks altogether. And I said, yeah, you could nibble a little bit, but somewhere between 1220 and 1178, I think I said, is where I'd be looking at it. It's actually now down a little bit lower at 1128. I said to subscribers, we're not going to get back into this. We're going to take a little bit of a breather because I want to see how it holds. But these are the stocks that are going to be trading stocks for a little bit longer. But the MJ, which is the actual ETF, it's called the Alternative Harvest ETF. I said nothing to see there. I don't want, that's the one that it's like GBTC, Bitcoin. When I said, let's not touch this, not for a long time, I don't see it. I can see it getting close to some kind of a buy in the next couple of weeks. That was about a week ago. Yeah, maybe it's got the 200-period moving average of 621 and it's trading at 404. Be real careful in almost everything you're looking at here because of the intraday whippiness. And I said, there are at least, every president does something well. If they try to do more than one thing, the other thing is done okay, but one of the things that they wanted, it might not be what you wanted, but it's what they wanted, and it's well done. Other things, it's kind of skeptical. And within that context, you've got a president that came in and in a year accomplished what he had said he wanted to do in many aspects, not all the aspects, and maybe it's not even the aspect that you wanted, but in terms of the list, I think this president has accomplished for him a chunk of what he wanted to do. What the outcome is longer term, none of us really knows. But I'm just saying on what is said and what is done. Okay, now I'm looking at it and I'm saying, gee, we've got a couple of things that are of minor importance. You've got a little thing, it's called impeachment that won't go through, but it'll be there. It'll be sitting there from the second that the new delegates come in. you've got a little thing called China, one of our greatest trading partner. You know, I'd say that that's a little bit of a problem. And they've had a third of a decline already in their stock market and their gross domestic product. I mean, everything I've looked at has been deteriorating. You've got a little thing called Brexit, because that'll have an influence on other things. You've got what's going on in France right now, which is going to be become a more international thing. We saw it when we had, what were those sit-ins there against capitalism? And this is my big theme for 5 years' time, 4 or 5 years' time, when the next big phase comes. So I don't want to deal with any of that now, but I'm saying, yeah, we are at 24,500 in the Dow, and we're saying which way should it go? And I'm saying that I think there is upside resistances that are very important to monitor, because the downside has specific levels to watch, and if they're taken out, you could just have a whole series of lower highs and lower lows. You don't have to have a crash, because you've seen stocks like Square. I mean, take a 50% decline in one of the major movers of the year on the upside. So at any point, you can have a pretty decent oversold rally. No question about it. Get ready for that. But at the same time, I'm saying be careful. All right. So the reason I got into that is because I was looking at a sector that I was asked about. Here's another one, GWPH. I'll do it very quickly. GWPH, this is the medical marijuana. I think it's a British company. GW Pharmaceuticals, trading down 3 at 121. Yeah, it's had its day in the sun, and now it has to regenerate a whole bunch of technical buy modes for me to be able to give this a play again to the upside. I'm saying just be careful here. It's very selective, and within a group, you might find that one of them is really the winner and the others are lagging. All right, I think I've done enough of that. A couple of questions I had. I had a text saying, I'm slitting my wrists right now. No, not the case. Because I remember, I'm still in the mega bull market camp. I'm still waiting for this next phase of the coda to come, where everyone is talking about stocks. Just everywhere you go, they're talking about stocks. Something like 2000. We're in the exact diametric opposite right now, where people, if they're talking about stocks, they're saying, should I get out? They're not saying, should I get in? They're saying, should I get out? Okay. So no, I'm looking at this, and I'm looking at it very constructively, but I'm trying to be as practical as I can. And practical says, this is a moment here that you can still be very cautious. There are some stocks that are coming to buy zones, but I don't know if I'll get the trigger for the buy zone just yet. I think we might have to wait a little longer. So next question I got was, the transportation index. I mean, this for me is a real good clue. Plunges down again today, down almost 2%, minus 3.41 at 174. Hey, look, here's your left side. We just looked at these stocks, the big arch formation. Look at this. The low that was made back in February the 9th, the week of February 9th at 176.62. I better type that in. 176.62 has been not just taken out, it's just been wiped out. It's at 174.01 right now, and it's got 2 bars in which to get back above 176 to at least try for a decent rally. But the MACD and stochastic are not good at this particular point. A little oversold in the day, that's the weekly, but the daily is getting a little oversold, so it should have had a bounce here, but it's not. And that's with crude oil being way down. So I'm just saying, let's be very practical and say, what's going on right now, if I'm looking at monthly charts, this monthly chart in the transportation index is giving me a sell signal, which at this rate, by the end of the month, is going to be a sell mode. To get out of that, it takes time, maybe price and time, but at least it takes some time. So that's what I'm saying. Be cautious right now. That's all. No slitting of wrists right now. We've got the only red we want to see are these candles, if you're short, that is. And let's look at the next question is, I did that, did the financials, did that. Oh, a question I had on Philip Altria. I said today I would look at it again because at this point we need to see if it's starting to stabilize. This is important. It's up 70 cents at 54.03. I'll talk about it the moment we get back I don't think it's ready, but what I'm saying is this is the basing that we wanted to see it start to base. I'll be right back. MO is trading at 54.05, up 72, Dow's up 45, S&P's down 2.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. We're back. So, to the questioner who asked me about Mo, if you're listening, this is Altria. There's no morality here. I don't care what they're in. I can't remember which one went into the products and which one stayed in tobacco. Is it Philip Morris or is it Altria? Whatever it is. I'm looking only at the price, and it's at 53.98. This is where this arch formation can become a cup formation. And if you're interested at all, I wouldn't treat it first as a dividend play. I treat it only as a price movement. You can buy it here at 53.99. Small, very small position. If by Monday afternoon it trades, it doesn't even have to close. It just needs to trade above 54.89, that was the high of the 12th. That was, the high of yesterday. If it trades above that, then if you're buying it here at 53.97, the first stop, I would say make it at least 1.5%. So by 75%, 75 cents. But I would add, if it goes above, I would keep that stop and I'd get ready to maybe add a second position. If it can hold above 54, I would have to make it 54.90. That's a point above. If it can do that within a day or two, then I would say to you, you know what? You keep the first position and a second trading position on any pullback after that, going towards the 54.80 level, 54.77, somewhere there. You can add another position, and that is your trading position. If at any point you correct and it breaks above 56.28, the trading position, you can have a trading stop, and your core position, you just hold that. Why? Because of the candle that's forming in the weekly chart with the stochastic flat at 9%, this is the first opportunity I see where you could actually get a nice bounce, but I treat it only as a bounce. Only later do you say, hey, maybe as a dividend player, I can keep it. Treat it as only a stock price movement right now. Certainly, if it takes out the low of yesterday, I'd be real worried of 53.17. But that's kind of the way I'm looking at it right now. Hey, folks, I'll be back with Tom O'Brien later on. Stay tuned. You've got Steve, you've got Dave coming up, and I'll be back with Tom. Have a great day. Check out my opening call, my daily newsletter, and my webinar from a week ago. Still very relevant. Have a great day. See you later.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.